Good day. In today's market update, European stocks mirrored a downturn in Asian markets on Monday, with bonds stabilizing following last week's sell-off. Boeing Company faced a substantial pre-market decline in the U.S. The stock 600 benchmark dipped 0.3%, paralleling the Hang Seng China Enterprises Index, which marked its lowest close since November 2022. S&P 500 futures lost 0.2%, accompanied by a 7.9% retreat in Boeing shares as more carriers grounded its 737 MAX 9 aircraft. Brent crude fell below $78 after Saudi Arabia adjusted official selling prices amidst persistent market weakness. Investors are seeking direction after a mixed bag of U.S. economic data on Friday, capping a week that witnessed the most significant global equity decline since October. Speculation about the Federal Reserve's cautious stance on interest rates remains a focal point. The upcoming U.S. inflation report and the onset of earnings season at week's end may serve as catalysts. U.S. Treasury yields declined 3 basis points to 4.02%, with some traders undeterred by the recent pullback, viewing it as an opportunity to capitalize on elevated yields before potential Federal Reserve rate adjustments. In Asia, the Hang Seng China Enterprises Index closed down 2.3%, driven by a technology share sell-off. Sentiment in China remains notably negative, as indicated by Nomura Group analysts. Despite signs of economic support, equity investors appear unconvinced. Elsewhere, Brent experienced a 1% decline, interrupting last week's rally following Saudi price cuts. These reductions underscored global concerns amid robust supply, outweighing tensions in the Red Sea and supply disruptions in Libya. Shifting our attention to China, investors anticipating a revival in Chinese stocks in the new year face challenges as the market deepens its slump in the first few days of trading. Persistent concerns over economic recovery and policy uncertainty have pushed onshore equity benchmarks to their lowest levels in nearly 5 years. Foreign investors sold around $600 million of mainland shares on Monday. The CSI 300 benchmark fell 1.3% to its lowest since February 2019, becoming one of the world's worst-performing major equity indexes. The Hang Seng China Enterprises Index slid over 2%, with tech stocks leading the losses. In 2023, the CSI 300 index recorded an unprecedented third straight annual loss. Proponents of Chinese stocks argue that valuations have become irresistibly cheap, despite the weak narrative. The CSI 300 trades at 10 times forward earnings estimates, below the 5-year average. Looking ahead, monthly data is unlikely to alter the weak narrative on China, with consumer prices expected to remain in deflation in December and credit expansion slowing, according to Bloomberg estimates. In a culmination of years-long efforts, a crucial week unfolds for potential launchers of Bitcoin-backed exchange-traded funds in the U.S. As reported by Bloomberg News, the deadline for last-minute revisions to pending ETF applications is set for Monday morning in Washington. The U.S. Securities and Exchange Commission holds its own deadline until January 10th to take action on at least one of these applications, with speculation rife among crypto insiders that the regulator might make multiple announcements simultaneously. There are 2 key technical requirements for the commencement of trading for spot-backed Bitcoin ETFs. Firstly, the SEC must approve the 19B4 filings by exchanges listing the ETFs. Secondly, the regulator must greenlight the relevant S1 forms, the registration applications from potential issuers, including heavyweights like BlackRock and Fidelity. Bloomberg News reports that the SEC is slated to vote on the exchange's filings, the 19B4S, in the coming days. Whether the regulator will act on the issuer's applications, the S1S, concurrently remains uncertain. If the SEC grants approvals for both requirements, trading for the ETFs could commence as early as the next business day. Supporters of Bitcoin anticipate that ETFs backed by the leading cryptocurrency would signify a significant milestone for digital assets, with billions of dollars potentially flowing in from both retail and institutional investors. However, historical SEC resistance, citing concerns about investor protection and market manipulation, has prevented the launch of such products under both Democrat Gary Gensler and his Trump-era predecessor, Jay Clayton. Since the SEC's loss in a legal battle against Grayscale Investments in August, speculation has heightened that the regulator may yield to the growing demand for this product. Market expectations of regulatory approval have fueled a 160% surge in Bitcoin last year, though it has not yet reclaimed the record highs reached in November 2021, when it peaked at almost $69,000. That's all the time we have for today. Stay tuned tomorrow for the latest news update. Remember to like and subscribe.